Good morning, happy Tuesday, and welcome to today's edition of Toggle's Daily Video Insight. My name is Jan, I'm the co-founder and CEO of Toggle. And if you like these insights, I encourage you to subscribe to our YouTube channel and you'll get a steady diet of many of these over the coming days and weeks. Today, we're going to take a look at Under Armour, a company that many of you know well. Some of you maybe even use their clothes to work out in. And what Toggle is noticing today is that we have seen quite a remarkable decline in realized volatility of its stock price. In other words, this is basically a proxy for the daily range in the stock price or the size of its daily returns. Now, when this happened historically, at least over the 13 similar occasions that Toggle has analyzed, it's actually found that the stock price typically corrected over the following 6 months. In fact, to the tune of the median decline was about 24%. So what you're seeing here is that over this horizon, starting around 1497, you could decline to as far down as 1081, according to at least this historical paradigm. Now, of course, if the stock were to continue riding, again, 1705 is kind of the point at which the odds of this paradigm still holding diminish significantly, and so you may need to take precautionary action. But it's worth taking a look at this historical chart just to see all of these other periods when you've had this yellow line down here is the volatility. It's worth seeing the decline that you've experienced previously and the drops that Under Armour stock actually had subsequently seen. Now, not all of them had dropped, but actually, as you can see visually, there were quite a lot of them. So at a minimum, this warrants a little bit of caution and potentially for anybody who is very bullish, the stock potentially taking advantage of the volatility to maybe establish or increase their position. Now, finally, and this is the section that we don't necessarily always venture into, but look at the scatter plot here on the right that gives you some sense of the gains versus losses from not holding this position or having a short position in it. For example, almost all of these dots were negative, in some cases quite substantially negative. So something to keep in mind. If you hold the position, take a look at the portfolio, have a think about your thesis and whether or not this is the moment to do something about it. That much for Under Armour today. In the daily brief, we also discussed the mechanics of index inclusion and what that might mean for the Tesla stock this week, because as many of you know, next week it will be included in the S&P 500. So much from us today. Again, subscribe to our YouTube channel if you would like to receive more of these insights, or otherwise sign up at toggle.global where you can also receive the daily brief. Thanks again, and we'll see you tomorrow.